Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. The Nifty and Sensex trade 0.5% lower but are off the day's lows. Yes Bank and India Bulls Housing lead the declines.
SEBI board approves tighter norms on mutual fund investments by relaxing rules for foreign portfolio investors as proposed by the HR Khan panel.
The Employee Provident Fund has decided not to make any new investments in bonds issued by private companies.
A 35 basis point cut from the RBI was aimed at showing urgency for banks to pass on rate cuts according to the minutes of the last MPC meeting.
And the CBI questions former Finance Minister P Chidambaram in relation to the INX media case. He will be presented before a judge in a short while.
We'll get to that story in a minute. Quick check on how the markets are faring. Yatin is here with a closer look.
Good afternoon, Harsha. And if you look at the markets, clearly a lot of bad blood on the street, especially to do with the mid caps as well as certain constituents in the future and options segment. Even if you look at Nifty 50, the advanced decline ratio is 2:3. Clearly, despite the fact that IT is as a pack is bouncing back, certain FMCG names are bouncing back, we are not witnessing some positiveness on the Nifty at this point in time. In terms of top gainers right now, we have heavyweights like TCS, which is gaining 2% along with Dr. Reddy's. Britannia Industries being the top gainer on the Nifty at this point in time, 3.5% up for that one. Tech Mahindra and Gear are also the other stocks which are showing some momentum. So in general, FMCG as well as IT, the defensive pack so-called has been doing well in the marketplace today. What's not doing well is Yes Bank. That stock dipped as much as 10% intraday, right now down 7% for that one. And remember, after the recently concluded QIP, from the QIP base price or the issue price, we have seen the shares fall almost 30%. So strong correction seen in Yes Bank post the conclusion of the QIP, which happened recently. Indiabull Housing Finance, Coal India and Vedanta, other stocks which are down anywhere between 3.5% to 4-5%. Talking about the most active securities, Maruti in the auto pack is doing well, 0.5% up for that one on good volumes. Big boy Reliance Industries continues to struggle. That stock is down 3 days in a row, 2% down for that one. Tata Motors, about a 9-year low for that stock, 1% down for that one, as well as SBI and NTPC, other stocks which are losing momentum in trade right now.
Ratan, thank you for that. But the big story today, the CBI will present P Chidambaram before a judge in a short while from now. The investigative agency arrested the former Home and Finance Minister last evening after climbing over his residence wall to gain access. Chidambaram, who was not traceable through all of Tuesday, held a brief press conference in the evening at the Congress headquarters. He defended himself, claiming that the CBI has not even been able to file a proper charge sheet which implicates him or any of his family members. The CBI, which had been chasing him for the full day, turned up late at the Congress office, missing him. They finally arrested Chidambaram late at night and took him to the CBI headquarters for questioning. Let's first hear out what Karti Chidambaram and Kapil Sibal had to say about this arrest.
This is a completely politically motivated witch hunt. It is being done only to tarnish the image of the Congress party and to try to silence the most vehement critic of this government. My father has been the most vocal, articulate and vehement critic of this government. In order to silence him, this action has been taken. This has absolutely no legal basis. It's a completely trumped up charge. I have said this before. These are events which apparently happened in 2008, for which an FIR was filed in 2017, a good 9 years later. And post that, I have been summoned 20 times. I have been raided 4 times. Nobody in the history of India has been raided as much as I've been raided. I was also in the custody of the CBI for 11 days. And everybody associated with me, directly, indirectly, even as a casual acquaintance, has been summoned. Some have even been taken into custody, and they still don't have a case.
The greater worry is this system, the way it is functioning, is targeting people. And today it is a member of a political party. Tomorrow it will be a baron of the media who doesn't want to toe the government line, as is happening. A fresh FIR has been filed. And in the past, we've had BJP leaders coming to Supreme Court who have not surrendered to the CBI, coming to Supreme Court, getting their bails heard. In one particular case, it took about 1 year for bail to be granted. So we are not, I think people are entitled to their remedies. But to say that, Mr. Chidambaram should have actually not filed a petition, not sought any remedy, it's absurd. I mean, it's like saying, well, I'd like to see a BJP leader in this position, whether he'll file a matter in Supreme Court or not.
Okay, that's a view of Kapil Sibal. Talk about the situation. I'm joined by prominent lawyer Mahesh Jethmalani. Mr. Jethmalani, thank you so much indeed for joining us. What have you made of these developments? Mrs. Chidambaram claims that even a proper charge sheet has not been filed. Was this arrest warranted?
Yeah, I mean, you don't get arrested only after a charge sheet is filed. I mean, on the contrary, arrest, custodial interrogation is in aid of investigation, which is pre-charge sheet. And this whole argument that charge sheet is not filed, therefore how can I be arrested, is putting the cart before the horse. I mean, I think it's a complete misconception.
Mr. Jethmalani, the other argument being made is that, that he has been, being summoned by CBI many times, he's been summoned by the ED, and he's responded to all these summons, and he's not, fleeing the country. Again, the question is, what was the need for this late night arrest and this drama around it?
Well, I mean, he has been on some kind of protection for 1.5 years. This is well known now, on a stay of arrest or some interim anticipatory bail from one court or the other. And the CBI feels it's got a very strong case. I mean, if you look at Justice Gaur's judgment, I know that Mr. Chidambaram and his lawyers are trashing that judgment. But, if you look at that judgment, it's an extremely telling judgment. And this is only the tip of the iceberg. I mean, everybody thinks it's only Indrani Mukherjee and INX Media. But the allegation is that on a number of FIPB clearances, you misused your power and authority and took bribes. So this all has to be followed up. And custodial interrogation, if the High Court feels that custodial interrogation is warranted, right, then that's the final. I mean, who is Chidambaram or his lawyers to do it? I mean, they tried to go to the Supreme Court, but they didn't get relief. But the final court is the High Court in this matter, which has so far, which has said that custodial interrogation, given the enormity of the crime, is warranted.
He's going to be presented before a judge today. Let's wait and watch how the story unfolds. Mr. Jethmalani, thank you so much for joining us with a quick view of what's going on.
Meanwhile, MNS Chief Raj Thackeray is at the Enforcement Directorate for questioning in connection with an IL&FS probe ahead of his arrival. The Mumbai police imposed Section 144 that bans unlawful assembly outside the ED office in Mumbai. Some MNS workers were also arrested as a measure of precaution. Thackeray, however, has appealed to party workers not to protest over the issue.
The Supreme Court has issued a notice to DLF regarding the failure to disclose material information during a QIP. That's according to a Hindu Business Line report. Bloomberg Quint spoke to DLF management, which claims that all necessary disclosures were in place. Darshan is standing by to tell us what this development is about. And, Darshan, give us a background of what this is about.
Yeah, so what happened is the Supreme Court has put up a notice, and this is what the Hindu Business Line reported today, based on which the stock fell 20%. So what this report that Hindu Business Line has indicated is there was a petition that was filed against DLF for not putting in a lot of information in their QIP, which happened a while back. And because of that, there is high potential that DLF will have to refund this entire 7,000 crore or 5,000 crore that they received via this QIP. So that was something that the market got spooked. Also, the report spoke about the petitioner coming out with claims that related party transactions were carried out with certain land dealers. So that's all the background that is. So we spoke to DLF CFO Ashok Tyagi, and that's something, and he is indicating the fact that even when the IPO came in, the same group of people they had vested interest, and they had actually tried to find loopholes in terms of some of the disclosures that were there. That was initially dismissed by the SAT. Now when this QIP came in, they again have done the same thing, but they themselves are saying that they have followed everything and all the disclosures have been made in the QIP. They're saying that the matter now pertains to a 5 to 6 acre land, which the petitioner has said, but DLF is saying that we did not disclose this because that's not our land. The company that was claimed here is not a subsidiary of DLF, and there is no any kind of agreement or relation with this party, and that is why they did not actually put it in this thing. So they're saying all the disclosures have been put into the QIP document, and there is no show cause notice that is given by the Supreme Court to DLF. Nevertheless, the counter has post the management clarification. The counter has reacted from the lows of the day. It's come off, but nevertheless, there is a bit of concern, and the counter still is down 10%. So it's recovered almost 50% loss that it had. but still under pressure by 10%. But let's listen into what the management had to tell on this entire issue.
Right from our original IPO in 2007, there have been certain, vested interests who have been trying to, find disclosure loopholes. Since then, virtually with every public issuance that we do, the same set of vested interests try to raise some fresh concerns or some fresh issues. And this QIP was no different. So when this gentleman did not, get any relief, they approached the Supreme Court, filed towards the application in the Supreme Court, including wanting to get implemented in the original land case and wanting to seek issues on this QIP disclosure. There's no censure, no observations, no show cause notice, as some people are saying. It's an extremely routine issue, and obviously we're working with our lawyers, and we'll reply to it in due course.
DHFL has proposed to repay small investors in full. The debt trap company which submitted its plan to the lenders has in fact split the retail investors into different categories. Vishnath Nair joins us with more details. Vishnu.
Right, yeah. So as you said, the retail investors are split into two different categories. So essentially what DHFL has proposed is that if you have investments up to 10 lakh in the NCDs that were issued by DHFL, if you're a retail investor with direct public NCDs, or you hold about 10 lakh worth deposits with DHFL, then you will be repaid in full within the time frame that has been agreed to, as well as at the interest rate that was agreed to when the contract was initially signed. So those people are going to be repaid in time, but with respect to people who have exposures over 10 lakh, those people will be classified as secured creditors and will be treated at par with secured lenders whenever the restructuring plan is once it is approved by the lenders. So as part of the restructuring plan, it's important to note that we earlier reported this, that the whole loan book is proposed to be split into three parts. One is the retail part of about 55,000 odd crore, where the repayments are in order, so there not major type of restructuring is being proposed. Certain project loans where there is some initial stress, but companies still can, the borrowers can still pay back. There the company is seeking a certain moratorium to be extended to these borrowers. SRA loans as well as some of the other large project loans. Now that is a big chunk of about 30,000 crore. That is where DHFL is seeking major part of the restructuring. Essentially for a certain portion of the debt as well as public deposits, what DHFL has proposed is that the repayment period be extended to 16 years and some of these will be converted into long-term equity-like instruments like CRPS and all of that with a 0% interest rate. So that portion of the loan will essentially not earn any interest for those 16-year repayment period that we are discussing here. There's also about 14,000 crore worth of NCDs in this SRA pool. Those will be repaid over 9 years, and there again there is going to be no interest rate. So this is the crux of the entire resolution plan that DHFL has proposed. But remember, this is just a proposal at this point in time. The lenders will have to negotiate and finalize this plan. The stated timeline is that by September some point the final resolution plan will be implemented, but we're already closing the end of August, and we've still not heard anything from the lenders as to whether they agree with DHFL's approach or whether they want to try a completely different approach towards resolving the stress in DHFL. So that will come to know as and when the lenders decide. But yes, the stated timeline is that at some point in September, this plan will be implemented in DHFL and the debt will be resolved.
Abhishek, thank you so much for that. The Mines Tribunal of the central government has stated a decision by the Karnataka state government not to extend NMDC's mining lease at Donimalai. Nikki Mirchandani is standing by with the implications. Nikki.
Well, thanks, Harsha. It's a temporary relief coming in for NMDC since the Ministry of Mines central government has set aside Karnataka state government, but the catch here is until the next hearing, because the state government is yet to prepare the statement of objection in a span of next week, where the two companies or the two parties would sit and decide the future course of action for Donimalai. This decision is after the company had reportedly filed a hearing, filed a revision application against the state order, where it said that the Karnataka government to put Donimalai mine on auction was a hasty decision and also violates the High Court order, which to an extent also set aside the 80% clause that the government had put back then. Just to put some numbers in perspective, Donimalai mine contributes to around 17% of the the overall output. And also yesterday we saw NMDC going ahead and taking a price cut coming in on this month after keeping the prices unchanged at the start of the month, which is in line with the trend that we're seeing globally. But earlier part of the day, we spoke to the management of the company and listened into that slice of the conversation.
We are actually satisfied with the order of the appellate authority or the revisioning authority. It has been stayed. They have heard us. In the next hearing, which has not yet been scheduled, we hope that the state government will also be present. And as of now, since the order has been kept in abeyance, we will have time to convince people, argue our case both in front of the government of Karnataka. We hope an amicable settlement is reached as much earlier than expected. We will now try and convince the state government as well. And of course, the central government, the CMD has been talking to everybody. We believe that it will be justified and in the interest of the industry, in the interest of the company, in the interest of the state government, and in the interest of the country if the lease is renewed as it was decided by the High Court.
The Central Board of the Employee Provident Fund Organization has decided not to invest in new bonds issued by private sector companies. The EPFO, which manages a sizable corpus, has decided to follow more stringent guidelines when investing in PSU bonds. Sajit Mangat is here with more details. Sajit, the quantum may not be very large, but it's a message which is going contrary to what we've been trying to do.
Yes, exactly. The Central Board of Trustees which manages EPFO met on August 21 in Hyderabad, and they decided three major things which came out. One was to withhold all investments into private sector bonds going forward, and as far as public sector bonds are concerned, they will take one of the four rating agencies into consultation before investing in all those bonds. Basically stricter norms with respect to investment in bonds of corporate bodies. Now, we don't have the exact number of how much it is invested in private sector especially, but if you look at the 2016-17 annual report, this portion where EPFO is investing into corporate bodies, which includes public and private sector, the investment is nearly 31% of the corpus, over 2 lakh crores, let me put it this way. And I assume a large portion of that is public sector, and private sector would be a small portion, but irrespective of that entire basket, which is 31% of the portfolio, is now being looked at very seriously by EPFO, especially after IL&FS. Now, EPFO also has an exposure of nearly 574 crores to IL&FS, and they've decided to participate in the debenture holders meet whenever it happens going forward. In addition, EPFO has decided to redeem the bonds of DHFL prematurely, and the board has given approval for that premature redemption of DHFL bonds.
Okay, hold that thought. SEBI, meanwhile, has announced a slew of measures aimed at plugging gaps in FPI regulations as per the HR Khan Committee recommendations, disclosures to credit rating agencies, and tweak buyback norms as well. You were at the press briefing last evening. How significant was it?
Yeah, so it's basically simplification and rationalization of the entire FPI regime. The SEBI has been coming out with a lot of FAQs and a lot of amendments over a period of time. So what they have done is they have used the HR Khan Committee, which worked on the FPI regulations, and they have streamlined into one set of regulations now. Major thing is that they have brought down the category of foreign investors from 3 to 2. We understand that some of the entities which earlier fell within the category 2 have been clubbed with category 1, which earlier had pension funds and sovereign wealth funds as part of that, and remaining entities have been clubbed with category 3, which used to have your AIFs and private equities and others. So these two things has happened. Broad-based classification has been removed because that was something which created some issues in 2018 when SEBI had proposed it, and the HR Khan Committee gave a proposal, so SEBI has put it in abeyance there. Over and above that, some of the offshore funds managed by Indian domestic funds have been allowed to come and invest into India through a FPI route as well. So that's one thing which has come in. From a CRA point of view or credit rating agencies point of view, they've been allowed to enter into an agreement with the issuer so that they can get access to the lenders' information with respect to all the borrowings which they have done, whether it's banks or NBFCs or mutual funds. So that helps CRA to bring in much more transparency of informing defaults or delays in payment. And on the buyback front, they have brought in some clarification that allows segregation of financial subsidies for calculation of debt equity ratio, because we remember in the case of L&T, the financial subsidy was included for calculation of debt equity, and that led to debt equity ratio going about 2:1. So now you segregate that and you calculate the debt equity ratio, which has to be under 2:1, and the segregated subsidies should have together have a debt equity ratio of less than 6:1 for a buyback to go through. So these things have been amended and changes made in the SEBI board meeting.
Sari, thanks so much for that. The Monetary Policy Committee voted to cut policy rates for the fourth time this year. If you remember, that happened earlier in August. Well, the MPC minutes, which came out on Wednesday, suggest that that decision was based on an expectation that a 35 basis point cut may actually speed up transmission by sending a stronger message. Pallavi Nahata brings us the highlights.
The Monetary Policy Committee had left policy watchers surprised when it chose to cut rates by 35 basis points, citing weakening economic growth. The minutes of the MPC meet, which were released on Wednesday, give us some insights into why the MPC cut rates and why it chose to cut rates by 35 basis points. Shaktikanta Das, RBI governor, said that it can no longer be business as usual given the current and evolving inflation and growth scenario, and that the economy needs a larger push. Ravindra Jalakia said that reviving growth required several economic reforms which were not within the purview of monetary policy except for the correction of high real interest rates to a certain extent. Judging the extent of the slowdown is the key issue, according to Michael Patra's statement, which also called for a broad-based policy response involving all policy levers. He cautioned that the space for monetary policy action has to be calibrated to evolving situations from here on. At its August meet, the RBI once again revised growth forecast to 6.9% for the full financial year. Even as reviving growth continues to take center stage at MPC, Chetan Ghate again flagged off possible fiscal risks. He reiterated that large public sector borrowings can be detrimental to the economy. He added that going forward, policy coordination between monetary and fiscal policy will be crucial for a healthier and more durable growth inflation mix in the economy. Ravindra Jalakia countered Ghate's view on fiscal risks, stating that fiscal slippage is not a matter of concern.
FOMC members, meanwhile, were not quite on the same page on their decision to cut rates for the first time in a decade. The minutes of the last meeting show that the members were divided on how to project the cut, with some, like the Federal Reserve Chair, choosing to call it an insurance cut. But all eyes are now on Jerome Powell's speech at the Jackson Hole Symposium on Friday, where he is expected to give his reading of the economic challenges. Mike McKee reports.
The theme this year is Challenges for Monetary Policy. Papers will be presented on how to manage the economy when interest rates are so low you can't really cut them when the economy slows down. But the real topic on everyone's mind is how to manage an economy under assault from within. A U.S. economy growing at 2% with unemployment at 3.7% and inflation around 1.7% doesn't appear to need any additional accommodation. But the president's trade wars have fueled concerns in the business community, which has almost stopped spending, and on Wall Street, which has priced in a series of rate cuts. Constant criticism from the president is also putting the pressure on the Fed and Chairman Jay Powell. Powell will kick off this annual conference in the Wyoming mountains with a keynote address on Friday morning. During the financial crisis, then Chair Ben Bernanke used his speeches here to pre-announce QE2 and QE3. Many on global Wall Street think that Jay Powell will use the same opportunity. This week's Fed minutes suggested many of the justifications for July's rate cut are still in place. But does Powell really want to ratify traders' views or, given the strong data, leave himself some options, particularly if he doesn't want to appear to be giving in to presidential pressure?
Out of time on the show. Thank you so much for joining us.